Up next on U.S. Bank Business Watch, presented by the Cincinnati Business Courier, what's with all the medical facilities popping up on local highways? The new construction is doing more for our community than treating patients. Leave the car parked and grab a bike to get around downtown. Bike share is coming soon. And the Eagle has landed in OTR, Southern cuisine and lots of local beers. U.S. Bank Business Watch is next. Good morning. Welcome to U.S. Bank Business Watch. I'm Brian Patrick. Cincinnati's health systems have always been lifesavers, but after the Great Recession, they're rescuing something else altogether, the local commercial real estate industry. On the Business Courier front page centerpiece this week, hospital highways. Over the past several years, UC Health, Cincinnati Children's Hospital Medical Center, Christ Hospital, St. Elizabeth Healthcare, Tri-Health, and Mercy Health have spent hundreds of millions of dollars expanding their networks of medical office buildings, especially along the I-71 corridor from Kentucky to Warren County. And more than 1 million square feet of medical office space, including the new Mercy Health Rookwood Medical Center here off I-71, has been developed since 2009, with another 300,000 square feet in the works. This activity comes 6 years after the recession sacked the commercial real estate industry. We're told office construction starts fell by more than 55% between 2008 and 2009 and continued to decline until just this year. And these are big dollar projects. The medical office building boom is easily responsible for $250 million in investments since 2009, bolstering the local economy. So why are all the new medical buildings close to major interstates? Well, just like fast food chains and other roadside stops, they need to attract customers. And the hospital industry says it needs visibilities to attract patients. That's one simple reason. Business Courier reporter Tom Demeropoulos is in the studio with editor Rob Dahlmeyer to talk about what else is behind the medical office building boom. Tom and Rob?
Brian, thanks. Tom, thanks for being here.
Thanks, Rob.
Merry early Christmas to you.
All right, same to you.
Before we talk about healthcare, I want to just let the viewers know a little bit more about commercial real estate. Maybe it's not something that's top of the mind for everybody, but as Brian said, it's really been in the dumps. Those numbers that number he shared about how far it fell in 2008, that wasn't just a one-year drop.
No, it's been really tough since the recession hit. Since 2008, commercial real estate development, in particular office development, has essentially tanked. It's really bottomed out from the highs of before the recession.
And even though the dips lightened up this last year, still nowhere near where that industry needs to be.
No, less than half of where it was before.
So medical, why are, and in the paper this week you've got a great map and we're showing where all these medical offices are being built essentially along highways. First of all, why are they going along highways, and then why are they going out to the suburbs?
There are a couple of reasons, Rob, why they're doing this. They're going along the highways because that's where the eyes are. They want to be in front of the eyes of both their patients and the doctors. A lot of this development is taking place because these different health systems are buying up physicians groups. So as they add these physicians groups, they need to put them somewhere, and what better place than right along I-71 where the doctors are driving past anyway. The other part of that is, as you said, they're moving out. They're moving out from the core. So there's been kind of a change in the way health systems take a look at providing care. They're moving away from bringing everybody down to the core of the city and doing as many procedures and taking a look at patients in outpatient centers whenever they can.
So 1 million square feet's been put in over the last 3 or 4 years. We've got another 300,000 square feet that's coming. What can we look for, though, maybe longer term? You mentioned in the story that there are some questions about whether or not healthcare medical office can continue to prop up commercial real estate on into the future.
Sure. So if you kind of talk to some of the experts, they're expecting about 2 more years of this high level of activity, but it's already starting to decline a little bit. UC Health in particular said they think it's going to go a little bit longer for them. They're looking at 5 to 7 years of activity of building new medical office space. So hopefully this lasts long enough to let the real estate industry kind of get back on its feet, start filling some of that empty space, and be ready for more development.
Yeah, well, we'd be ready for that too. Thank you very much for being here. Brian, back to you.
Very interesting story. Hospital highways, read about it in the print edition or online. A primary care doctor affiliated with UC Health plans to launch a medical practice in the U.S. Bank Tower downtown Cincinnati next month. It will be right across from Fountain Square, which is bustling right now for the holidays. Dr. Bernard Lenchet says it will be a very convenient location for people to walk to during the day. And that's the target audience, people who work downtown. An office staffed by a primary care medical doctor is a rarity downtown, but it speaks to the revitalization of the city's urban core, according to Dr. Lenchetz, who lives in Sycamore Township. Well, after weeks of emotional public debate and last-minute deal-making, Cincinnati City Council has voted 6-3 this past Thursday to restart and to finish the streetcar project, going against the wishes of Mayor John Cranley. Councilman Kevin Flynn was the pivotal vote needed to restart over a promised Cranley veto. He struck a deal with Carol Ann and Ralph V. Hale U.S. Bank Foundation to provide $900,000 per year for the next 10 years to help cover the streetcar's operating costs if other non-city funds cannot be found.
Honestly, mixed. I mean, I feel very gratified that we were able to get a deal done, working under some very short time constraints. At the same time, I wish I didn't have to do the deal. I wish that the city wasn't at risk, as our independent auditor said, for up to $80 million.
This $9 million number, I mean, just to be very clear, it's a commitment to backstop operating dollars for the first 10 years, and it comes from not just Hale Foundation, but a lot of business leaders and a lot of philanthropic leaders around the city.
Construction presumably begins next week. Mayor Cranley won a wide majority in the election just 7 weeks ago, partly on a promise to kill the streetcar project. A longtime aide to former Cincinnati Mayor Mark Mallory will be the first executive director of Cincy Bike Share, a bike-sharing nonprofit that is looking for corporate and foundation support and hopes to be up and running by next year. Jason Barron, who served as Mallory's Director of Public Affairs for 8 years, was hired by the nonprofit's board. The service will have stations across downtown and over the Rhine where people can rent bikes.
So the idea is that you might, there'll be like 20 stations throughout downtown, and you might check a bike out and then bike to another station where you have to either have a meeting or grab lunch or meet with a friend or run an errand, and then you come out of whatever that is, get a new bike from the station, and then bike back to wherever you're going next.
I just saw this in D.C. It's really cool. The service is aimed at residents and tourists as well as workers. Operating costs are estimated at around $500,000 a year. The startup costs about $1.2 million. BikeShare hopes eventually to expand in northern Kentucky and uptown. Centrifuge has named former Procter & Gamble CEO Bob McDonald as the chairman of its board of directors. McDonald co-chaired the regional task force that led to the creation of the Innovation Accelerator in the summer of 2012. Business Courier reporter Andy Brownfield has an interview with McDonald in this week's print edition. With regards to startups, McDonald told Andy after a 33-year connection to Procter & Gamble in Cincinnati, he said, quote, "I just think we're moving in the right direction, and I want to make sure that continues." Chip Gerhardt has been in politics for his entire adult professional life and now uses his experience to lobby state and local political leaders on behalf of issues that are important to the Cincinnati region. Gerhardt is the president and founder of Government Strategies Group. He was deputy director of former Ohio Governor George Voinovich's regional economic development offices and has been involved in the campaigns of Governor John Kasich, State Treasurer Josh Mandel, and Attorney General Mike DeWine.
There are things going on in Columbus, Ohio, every single day that impact this community. And as a community, we need to recognize that, embrace it, and be active with respect to public policy decisions being made in Columbus that impact this community.
Our reporter Chris Wetterick has a Q&A with Gerhardt this week, and among the questions he answers is how to persuade reluctant donors to cut a check. Be sure to check out the full interview for some useful insight on fundraising and other key influencers. Well, the Eagle Food and Beer Hall is now open in an old post office on Vine Street and over the Rhine. The restaurant is named for the eagle that adorns the building and is owned by the same partners that run the Corrido chain in Bakersfield in OTR. The theme is blues music, southern foods, and 100 beers.
We've got Rhinegeist, we've got Rivertown, we have 50 West, we have Mount Carmel, and we're going to be rotating a bunch of other local ones in and out.
Bonnie raves about the fried chicken as well as the beers. Up next on U.S. Bank Business Watch, a guilty plea in a Ponzi scheme case allegedly run out of this office. And is a new home or a new movie theater coming to the West Side? Here's some news you may have missed if you're not reading the Business Courier online every day or following us on Facebook and Twitter. A disgraced local money manager has agreed to enter guilty pleas to charges connected to a Ponzi scheme. Glenn Guillermo is accused in a $100 million mail and wire fraud case. He allegedly used client money to buy this office building, a vacation condo, and pay his home mortgage as well as pay for other expenses. His attorneys are asking for a prison sentence of 8 to 10 years. The prosecutor is asking for a sentence of up to 15 years. Emotional testimony last week in the trial of Matt Daniels of Bear Creek Capital, facing 23 criminal counts of fraud. He's one of the partners in the failed $175 million Kenwood Town Place development on I-71. Contractors walked off the job in late 2008 because of unpaid bills. Daniels became upset a number of times during his testimony. At one point, he even asked for a few minutes to compose himself. The owners of Escape Theaters are working to bring a 14-screen movie theater to the site of the former JCPenney store here in Northgate Mall. The mall's original plan for a theater was approved in 2007, and a hearing next month will determine if the renewed proposal can move forward. It would create 5 full-time, 30 permanent part-time, and 15 temporary part-time jobs within the next 2 years. The Greater Cincinnati Film Commission announced a major motion picture starring Cate Blanchett and Mara Rooney will be filmed entirely in Cincinnati next year. The film is called Carol. It's set in 1950s New York City. The production selected Cincinnati because of friendly tax incentives offered to film crews. Filming is expected to start in spring 2014. Well, this has been an important week for the financial markets. We have a better idea now when the Federal Reserve will wind down its emergency stimulus measures. The measures were put in place during the financial crisis, and with the economy slowly but surely firming, it is perhaps time for those measures to be unwound. A number of elements will be impacted as this happens. So for perspective, we turn to our very own Jim Russell, U.S. Bank Wealth Management Senior Equity Advisor. Jim, good to have you with us. Happy holidays.
Same to you.
Very interesting week. Tell us about these emergency measures. What did they include and what's happening now?
Great question, Brian. There is a little bit of confusion out there on how this works exactly. What the Fed announced this week was basically to maybe step down the extreme accommodation that has been provided to the U.S. economy, as you mentioned, put in place to maybe lessen the severity and the duration of the recession.
They're buying billions of dollars in bonds.
They
right?
are. What they actually do is they print money, buy bonds on the intermediate and long end of the yield curve to keep the cost of money or the interest rate very low. We feel like that's been a constructive development.
So that bond buying is going to slow now?
It is. They're going to start to step down that program just a little bit. It has been extremely large in terms of scope and scale. You can see here that there's been really 3 tries at this. One, the first beginning in 2009, the third one being ongoing right now. They're going to start stepping this down in January of 2014, probably to be completed by the end of the year of 2014. And the step down process is called the taper, which is a word that's out there in the media a bit.
Yeah, and taper tantrum.
Yes, sir.
The market did not throw a taper tantrum, but actually skyrocketed.
The markets like the way this is coming to pass, and that is, frankly, the economy is firming, as you'd mentioned. Unemployment starting to come down a little bit. We have a 4.1% growth rate in the United States in the third quarter. Low inflation, so things are starting to come together right on cue. So they think that maybe taking the foot off the accelerator at this time probably makes some sense. Now, there's been a little bit of a correlation with the stock market as well. Now, we think the correlation between the QE programs and the accommodation and the stock market is indirect, and that is the accommodation helps the economy And of course, the stock market reflects the economy. So the QE programs didn't directly impact the stock market. As the economy began to firm with low inflation, we think the stock market reacted favorably to that. You can see what that timeline looks like.
It seems like it took a long time, but it was effective to some degree.
We think it was very effective, and that is interest rates were made at generational lows really for the last 3 or 4 years. Now, that party is probably over. Yeah, that's correct. And we think in 2014, it is very likely that interest rates are on their way higher. In fact, the low point for the 10-year Treasury yield in 2013 was 1.6, and as we look at the markets today, that rate is approaching 3%. So we don't think that those spike higher. We don't think that any extremes will be reached, but we do think a stair step a bit higher is underway already.
I know you'll keep an eye on that for us in 2014. Merry Christmas.
Same to you, Brian.
We appreciate you and U.S. Bank.
Thank
Jim.
you, sir.
Still to come on U.S. Bank Business Watch this morning, what happens when 6 university presidents get together? We'll recap an extraordinary event with one of those presidents coming up next. And congratulations this morning to Jody Binning, another of our 40 Under 40 honorees, owner of 3 Point Marketing. Good to have you with us this morning in our Business Insight. Last week, the Business Courier had the great pleasure of hosting 6 local university presidents at a higher education forum at the Taft Center downtown. Imagine coordinating the schedules of presidents Father Mike Graham from Xavier, David Hodge from Miami, Ed Hughes from Gateway Community and Technical College, Tony Eretz from the College of Mount St. Joseph, Santa Ono from University of Cincinnati. He's especially busy at this time of year, Santa, you know. David Armstrong from Thomas More College. Well, the Business Courier did it. A special supplement will be coming out next week detailing what the presidents had to say on a variety of topics. These are challenging times for higher education. College of Mount St. Joseph President Tony Eretz joins Business Courier publisher Jamie Smith here in our studio with a recap of the discussion and preview of our special section. Tony and Jamie.
Thanks, Brian. Thanks for being here today, Tony.
Welcome.
It was a great discussion that we had with you and your peers this past week. Talk to me a little bit, you know, the main theme there was how do you guys as university and colleges continue to do what you do in light of the economic times we've had, you know, with tuition costs still going up, with the competition out there. Talk a little bit about how you at Mount St. Joe can do that.
Well, these, as we said, I think all the presidents agree, these are historic times for higher education. Not only are we facing economic challenges, but we're also facing deep demographic challenges in the local Cincinnati area. The number of burst families have been having, we're about 3 to 5 years into a 15-year decline of the number of graduates from high schools. So we're all fighting over fewer and fewer students. So like any business, you work to distinguish yourself in a market and you work on your value proposition. So I think what you heard from all the presidents are their attempts to increase their value proposition and show why it's worth the money. You get a return on your investment by going to your college or university, and the parents worry a lot about that.
Yeah. Tell me a few of the ways that you at the Mount have strengthened your value proposition.
Well, one thing, I think people have a misperception about the cost of private higher education. If you put it all in, room and board, tuition fees, parking, everything, we're about the average same cost of the University of Cincinnati. People don't understand that. So one of the things we've been working really hard is to keep costs low. Even though our list price continues to increase, we also increase financial aid so that for the families it becomes more affordable. But we're also working ways to help students work their way through schools through co-op programs and partnerships. For example, we're partnering with Education at Work that provides part-time jobs to students. In addition, they can earn $6,000 a year in scholarship money. So that's a unique, innovative approach. Parents also are worried about a job. So one of the things that you heard everybody talking about, they're talking about jobs and how their students are successful in the job market when they graduate. We have a new program called the Talent Opportunity Program. It's a 4-year co-curricular program that students can take. It's optional for free. And if they do everything that we require to get gold certified, we'll promise them that if they don't have a job within 6 months of graduation, we will pay for additional career counseling with a professional firm to help them find a job.
Help them get there. That's great. Talk to me a little about, you know, you're talking about this pool of students you're all fighting for. Talk to me about, you know, what are some of the tools you get besides that after college, like athletics? I think you mentioned athletics is a big reason students are coming to the Mount right now.
Yeah, College of Mount St. Joseph is NCAA Division III, which means we are not allowed to offer athletic scholarships, but we do offer academic scholarships. So the way that works financially for us is we make money on athletics. So we have 22 NCAA coaches out there recruiting athletes to come to the Mount, and just a few admissions counselors. So 45% and on average in any typical year of our students are intercollegiate athletes. So it's a huge enrollment driver for us.
Oh, that's incredible. Now you guys did talk a lot, which really surprised me, about collaboration. You know, among the 6 that were speaking there, you guys work together and kind of find your specialties, and then if you don't have that specialty the student's looking for, they have other choices here in the city.
Exactly. The financial situation is such that we can't do everything alone anymore. For example, with the University of Cincinnati, we're partnering with them with the State of Ohio Co-op grant. And they're the lead partners, but we're a minor partner in that we get some of the money from Ohio to grow our co-op program, and so does University of Cincinnati. So we work together, and the Cincinnati community benefits.
Well, that's great. Well, it was a great discussion. I can't wait to see the supplement that we put out next week. I hope you enjoyed as much as we did. And just keep doing what you guys are doing, because it is important for the future of our youth. And obviously, they're going to be the future business leaders here in Cincinnati, I hope.
That's true. If we're successful, Cincinnati will be successful.
Great. Thanks for being here today, Tony, and have a great holiday.
Thank you, Jamie.
Brian, back to you.
Jamie, Dr. Tony Eretz, thanks for joining us today. Thank you for being with us this morning for U.S. Bank Business Watch. We'll be back next Sunday, each Sunday morning in 2014, 6:30 right here on Local 12 if you're an early riser. 10 a.m. on the CW. For more business news during the week, you can visit the Business Courier online. Just sign up for our daily emails. You can also follow us on Facebook and Twitter. The address is cincinnatibusinesscourier.com. For all of us here on U.S. Bank Business Watch, I'm Brian Patrick. We wish you a Merry Christmas, a happy holiday season. We hope you have a great Sunday, a good week. We'll see you in 2014.